Today we're diving into a stock that is flying under the radar. It's backed by a billionaire hedge fund legend, David Einhorn. The name Green Brick Partners, ticker GRBK. They have returned over 400% in just 5 years. But behind the scenes, this company has a strange and controversial origin. Before it became Green Brick, it was known as Biofuel Energy, a failed ethanol venture that burned investors' capital and was ruined by mismanagement. The company was essentially left for dead. But in 2014, David Einhorn, the famed short seller known for exposing frauds, did something unexpected. He took control of the broken shell, injected capital, and transformed it into a home building platform. What was once a red flag became a potential goldmine. Is this misunderstood home builder still a buy? Or has the easy money already been made? Let's break it down: the business model, financials, risks, and a fair value estimate. All in this video. Let's go. Overview. Green Brick isn't just your typical home builder. Headquartered in Texas and Georgia, Green Brick is a home builder and land developer, controlling everything from acquiring the land to selling the final product. They focus heavily on high-demand areas known as infill and infill-adjacent markets. Places where land is limited but housing demand is strong, often within or right next to already developed neighborhoods. These spots are tough to build in but offer higher margins and faster sales. As of Q1 25, about 80% of Green Brick's revenue came from these supply-constrained markets. A clear sign they're building where people want to live. Green Brick doesn't just build homes. It acts more like a strategic platform, owning majority stakes in several local builders. These include CP Chennai Homes, Normandy Homes, Southgate Homes, Trophy Signature Homes, and others. Each brand targets different price points and buyers, giving Green Brick exposure across the entire housing spectrum. But here's where it gets really interesting and why I wanted to make this video. It's their land bank. As of Q1 25, Green Brick owned over 34,000 lots valued roughly at $1.8 billion. That's a staggering figure when you consider that the company's entire market cap is only around $2.8 billion. In other words, about 64% of the stock's value is backed by the land they hold. While many homebuilders scramble to secure land, Green Brick already owns the foundations of the future, literally. And behind the scenes, none other than the billionaire hedge fund legend David Einhorn, who owns more than 20% of the company. A guy known for shorting frauds, yet here he is, long and loud on a Texas home builder. Let's move on to the financials. Let's look at the numbers. Green Brick's EPS is around $6.8 with the PE ratio just under 10. That is quite cheap given their performance. No dividend, but I do wish they distribute some. Short interest is elevated and market cap is around $2.8 billion. In the past year alone, the stock has returned just under 20%. But in 5 years, it's returned over 400%, easily beating the S&P 500, which returned around 110%. Since Einhorn took over in 2014, I'm focusing only on the numbers from 2015 onward. And they are nothing short of explosive. Revenue per share has been growing at an eye-popping pace of around 20% per year for almost a decade, rising from $7 in 2015 to $47 on trailing 12-month basis. But the real jaw-dropper, earnings per share. Green Brick's EPS has skyrocketed from $0.38 in 2015 to $8.32 now. That's over a 20x increase. This isn't just growth, this is compounding on steroids. Return on equity has averaged around 20 to 25%, and ROIC currently sits at a very strong 20%. Margins are excellent, operating margin is over 22%, and profit margin is around 17%. Not bad for a cyclical asset-heavy business. Balance sheets look solid, long-term debt is manageable, just around 300 million, while equity stands around 1.8 billion. That gives Green Brick a healthy debt-to-equity ratio. Green Brick doesn't pay a dividend, but that's not a downside. Instead, they're aggressively reinvesting cash into land acquisitions and growth projects, which helps to fuel their impressive return on equity. On top of that, they're returning value to the shareholders through stock buybacks, with about 38 million repurchased by the end of April 25. Now let's move on to the risks. Looking ahead, what are the main opportunities and risks for Green Brick? Let's start with the opportunities. Sunbelt migration continues to fuel demand. Texas and Florida are still booming. Housing shortage in the US persists, especially for the entry-level homes. Vertical integration, meaning because Green Brick handles everything from buying land to building and selling homes, they keep more profit and have a better control over where and how they build. Lastly, their massive land bank acts as a buffer in a famously boom and bust industry, offering a cushion during downturns and a competitive edge when the demand surges. Risks. Interest rates. Mortgage rates affect affordability and buyer demand. Next is the cyclicality. Home building is notoriously sensitive to economic slowdowns. Tariffs and costs, like lumber and labor, could pressure margins. Concentration risk. They are very regionally focused, which is both a strength and a risk. Overall, Green Brick is a lean, efficient, and opportunistic, but you still need to watch the housing cycle. Intrinsic value. Let's estimate a fair buying price for Green Bricks. The current forward EPS is around $6.81. Last year's Q1 earnings included a one-time gain of $0.21 per share from the sale of Challenger Homes. So even adjusting from that, Q1 earnings have still grown year over year. That said, EPS over the last 5 months have shown some volatility. Analyst estimates for 2025 vary from between $7 and $8, with projections from 2026 coming in roughly $0.5 higher. The key uncertainty is how much earnings may soften in the near term. But looking beyond that, I expect earnings growth to normalize, especially once the company begins building on its large land bank instead of spending heavily to acquire more. At that point, margins could expand significantly since they won't be tying up new capital in land purchases. Given the short-term uncertainty, I'll take a more conservative approach. I'll assume 0% annual EPS growth for the next 5 years, followed by 10% growth thereafter. And as always, I want 12% for my money. Green Brick currently trades at a PE ratio just under 10. Historically, its average PE has been close to 11 with the median around 8. If the company can return to consistent growth, even modestly around 4% or more, I believe a higher multiple is justified. There is also a real possibility that Green Brick returns to its historical 20+% growth like in the past, especially once it transitions from aggressively acquiring land to actively building on and monetizing its existing land bank. When a homebuilder shifts from being a net buyer of land to net user, profits often accelerate since less capital is tied up in the land purchases and more flows through to the bottom line. To stay on the cautious side though, I'll use a conservative PE multiple of 12 for the valuation, assuming the company resumes a low-level growth over the next decade. Based on these assumptions, we get an estimated fair value of around $85 per share, suggesting that the stock is currently undervalued by roughly 30%. And this is using really conservative growth and valuation metrics. If Green Brick can accelerate growth over the next decade, and the market rewards it with a higher multiple, let's say a PE ratio near 20, and an EPS growth of 10% for the next 10 years, the upside could be far greater. That's where the real long-term gains would come from. To wrap it up, Green Brick is a niche home builder with strong financials, excellent returns on capital, and a strategic land-first approach. It has crushed the market over the past decade, yet still trades at a value multiple. That said, the company is currently navigating some short-term headwinds. I don't own Green Brick yet, but I'm going to buy a small position on it. Even at today's price, I think the stock is flying under the radar and deserves more attention from long-term investors. If you believe in long-term strength of the US housing market and you're comfortable riding to inevitable cycles, Green Brick could be a solid piece in your portfolio. But remember, this is not financial advice, and do your own research. Well, what do you think? Is Green Brick a bad bet? Comment below, hit the like and subscribe for more. Until next time, do not lose money and safe travels. Bye bye.